Welcome, everybody. Hope you're having a good Monday. I'm a little under the weather, so we've got backup here with Trenton, and we've got Greg with us. He was with us at the earlier event this year when we were talking about side hustles. I know it's a weird name, but the opportunity for you to make extra income, it really stood out for some of you, and it stood out for some people in our brokerage as well. And Greg said, well, let's do it again. So here we are again. We're going to give you an opportunity to listen in to see that all of you do actually have an opportunity to earn extra income and do it the right way. And I think the whole world is gravitating towards this way. Don't you think, Greg?
I do, Tristan. Seems to be the way everything's moving. I think when you look at it, I think the big one that always sticks out at me was what Rocket Mortgage has done. So Rocket Mortgage, they acquire Redfin, they acquire Mr. Cooper, right? So they have one-stop shop for everything.
Well, you also have had Zillow do this for a very long time, right?
Absolutely, yeah.
And then you also see brokerages, big brokerages trying to do the same thing. So it's an all-in-one. They're trying to capture more of the pie. So in essence, we need to really follow along the same path. The very first time you told me about this last year, I was like, oh, this makes a lot of sense. Greg, so quick thing. Give me an intro as to who you are, what you do, and then we'll get going.
Well, thanks again for having me on a call, Tristan, Trenton, everybody. So my name is Greg Wareham. I work for the Federal Savings Bank. I'm their National Program Director for a couple different projects that we have going on. Specifically, what we've been focusing on aggressively for the past couple of years is to be able to provide the perfect bolt-on mortgage system or service for our real estate agent partners. And we've really been able to carve something out that's compliant, where you can earn revenue and take care of the consumer at the same time.
With that, before you show me and show us all the cool stuff and how this works, can you give me an average of how much an agent would make based on the average of what they close? I know you have those numbers. You shared with us last time.
Yeah, I mean, we found that our average agent really depends on the overall production that the agent's doing, but we've seen agents that are able to earn on average an additional $35,000 a year based on average production with a real estate agent.
That's pretty crazy. I actually forgot that number, so that's actually really good.
It's been great. I mean, the great thing about the program is, one, you can help your people that are looking to purchase a home, but it opens up the whole database for past customers that are looking to pull cash out against their equity to purchase a new home, refinance, and now you're licensed in all 50 states. So it really becomes an opportunity to do a lot more business on the mortgage side as well as the real estate side.
All right. So where do we start with this, Greg, so we can go through the whole picture?
So I pick it up right from the beginning, right? How does this program even come to be? So we started working on a program a couple of years ago. And what the catalyst for the whole thing is back in November of 2022, the Federal Housing Finance Agency, in conjunction with HUD, and HUD runs FHA lending, came out with a new ruling. And under that new ruling, they've said that moving forward, a real estate agent could be compensated on both sides of the transaction, meaning they could represent on the mortgage side as well as the real estate side for the same consumer. And that really overturned decades of not being able to do it. I do remember a time back in the 90s when I came into the mortgage business, there were times where real estate agents did represent on both sides, but the government made it virtually impossible to do that until this ruling they came out with in 2022. Now, for us, as soon as they come out with the ruling, again, 30 years in the industry, I'm thinking, gosh, got to be an opportunity in here for our real estate partners, agents, brokers, and everyone that have been so good to us to help them earn revenue on that side of the business. And we weren't the first company to think that. The big one really was Rocket. Rocket came out of the booth hard January 1st, 2023. They announced they were going to hire real estate agents moving forward, and everyone's going to make a boatload of money, right? They're going to make money on both sides of it. Rocket stayed in that space for about 12 months. And after 12 months, they had closed that division. Well, why? Well, they learned what a lot of us know in the industry is how do you ask a productive real estate agent to take a 20-hour state and federal course, facilitated course, study 20 to 30 hours for a state test for mortgages, and a test that inevitably has a 35% pass ratio. It's, of course, not that an agent can't pass the test, is you really have 40, 50 hours to invest in this. And of the 3,000 agents that Rocket had hired, the less than 1% of them got their real estate license. So that's why they ended up closing the division or got their mortgage license. Now, there's one caveat to needing to take that course or pass the test, and that's if you work with a federally chartered bank. And a great example is when you look at loan officers that work at Wells Fargo, Citi, Chase, 95% of them, they've never taken the course and they've never passed the test. And the reason for that is they don't have to. That federal bank charter trumps the need for anything else. So once you go to work at a federal bank, you can originate mortgages. Now, knowing and where I'm going with this, at Federal Savings Bank, we have a federal bank charter. And we knew that we had this and we knew we wanted to create the opportunity. But with that, it's okay, now we want to do it. How do you execute it at a high level and put something together that makes sense for everyone?
Yeah.
And specifically the compliance end of it, that was the big piece that everyone had to nail.
Okay. So if we go with a traditional mortgage broker branch arm, we would need to get our, what is this, MLO license?
The NMLS number.
Yeah, that one. Thank you. I'm obviously only a real estate agent. And when we're looking at a company like yours, why are you guys allowed to bring us in and give us a portion of this commission without us having an actual license there?
It's a great question, Tristan. So in the mortgage space, when you work with a federally chartered bank, we're governed by what's called the OCC. That's the federal regulating body that governs banking. We're not governed by state laws. In mortgage licensing, that's a state issue. So for us, what we had done is we submitted to the OCC, here's our plan. Here are the agents that we want to hire. Here's going to be our process for compliantly bringing people on and having them originate. The OCC approved the program, which gives us the ability to hire real estate agents and have them involved in the mortgage side without having to take the tests or attend that class.
Okay, what do the details look like then? So let's say I'm interested, or let's say Trenton's interested, right? He's an agent, he's got a license. He's going to go in and call you, and then what's the process? What's involved?
So what we do is when we hire you at the bank, we hire you as a part-time employee of the bank. And we call that position a dual employed banker. Once we brought you on, you're required to attend a 3-hour training course. And if anybody on the call has ever had a corporate job before, let me break down the 3 hours for you. The first half, we talk about the bank. And we talk about all these amazing products that we have to help you sell more real estate. And just a quick glimpse of that, we do 5% down second homes, 10% down investment properties. We'll cross-collateralize properties. Like we do a lot of really cool things at the bank to help you sell more real estate and help more customers. Once you come out of that 3-hour course, your license number goes live. And with that course, we would have trained you on some of the things that you need to do, and it'll be ongoing once you have a customer that's looking to apply for a mortgage.
Okay, that was fast. So let's say we're there, we got it, 3 hours. How do we bring in people? Are we the ones helping them with the whole loan process? Do we quarterback it to you? You do it? What does that look like?
That's a great question, Tristan. So here's how it works and what we found to be best practice. It's all right. You have someone who's interested in purchasing a home. John and Sally are purchasing a home. A good script and what we found to be most effective is, okay, John and Sally, next step of the transaction is we need to get you pre-approved for the mortgage. I'm going to send you over a text message and I'm going to copy my senior banker that I'm partnered with at the Federal Savings Bank on that text message. And he or she's going to answer any mortgage questions that you have. Great meeting you today, Joe and Sally. Greg, could you kindly reach out and help with any mortgage questions? So what we're going to
Okay.
do on the senior banker side that you're partnered with, we're going to call them. We're going to call the customer once you've made the introduction, and we're just going to go through a high level review of everything. All right, how much you're looking to spend on a home, how much you're looking to put down, property type, and so forth. At the end of that conversation, we're going to tell the consumer, all right, Joe and Sally, I'm going to reply to the text chain, and I'm going to have Trenton send over the mortgage application for you. Great meeting you today, Joe and Sally. Trenton, could you kindly send over the application? We're going to create for you a unique application that's just for you. So you'd simply copy and paste that to the text chain or to the email, whatever mode of communication you want to go with. Once you do that, you've made the constructive referral over to the senior banker. Consumer is going to go in and complete the application. Once they submit the application, it's going to merge into our database. We're going to call the customer. We're going to call them, run through everything, run them through desktop underwriting, let them know the documents that we need to gather. I think a really important thing in that, Tristan, is we're not going to ask you as the real estate agent to collect any of the documents. You're not going to collect W-2s, pay stubs. You're not going to do any of that. The senior banker and their team is going to handle that part of the transaction.
So we do the introduction, kind of like what we do now with our own partners as a mortgage broker, right? The ones we work with. How do we go around, or is it an issue? I don't know. This is where I'm going to you. RESPA violation, because you saw Zillow get attacked in Washington, saying, hey, every person that you were sending to agents, you told the agents, send them over to the lender on Zillow's side, right? So how do we go around that?
Yeah, that's a great question. So a few things. So keep in mind, you're now a part-time employee of the bank, right? You work for the bank, so you don't have that same level of conflict as you would with that kind of that third-party transition. And we built into your phone, we load 3 applications on your phone. One is Outlook, one is something called the Blend app that's for the consumer, and the other one's something called Encompass, which is more fulfillment. When you have a transaction that goes live, we're going to train you to open up the Encompass app, click on the customer's name, and when you do that, all 6 steps of RESPA that you need to complete to legally get compensated are built right into the phone. And I'm going to give you a great example, Tristan. So now we have a transaction that's live. You're going to receive a phone call. You receive a phone call from someone on the team saying, hey, Tristan, Trenton, great news. John and Sally, they're under contract. You sent the contract over to us. We need you to log into the application on Encompass. They'll walk you right through it. You open it up, the 6 steps come up. One of the steps is you need to facilitate the ordering of the appraisal. Oh, how am I going to do that? Oh, step 1, big blue button on your phone that says order the appraisal. You click it, it timestamps it, goes to the appraisal department, who's going to reach out to the appraisal management company, call you or the listing agent. It's business as usual. Step number 2, order the flood certificate required for all properties. Big blue button, click it, timestamps it, goes over to our flood team. There's 2 really important parts about that, Tristan. One, all 6 steps of RESPA are handled the exact same way. You're just clicking and acknowledging. That clicking and that acknowledging is what keeps the program compliant. Because when you're audited, you look like what happened with Zillow, they have no paper trail.
Yeah.
So when you're audited, right? And we've been audited by the OCC, we literally had 0 findings. But because we can say, oh, what did Tristan do on the transaction? Here you go. Here's everything that he did.
Yeah, because you have the system. I like it.
Everything's digital, recorded, and compliant.
Okay. There are a couple of questions. And I'll go to the questions, but I have a question first. When we're looking at the compliance, it all tracks on the mortgage side. Does my real estate broker need to be involved as well?
It's a great question. The answer is no. As independent contractors, the broker doesn't have to be involved. We automatically send out the dual disclosure forms as part of our document set.
Okay, perfect. Daryl, you've got a great question. I'll get to you. First, I'm going to go to Bill's. What's up, Bill? Can we get pre-approvals before we make an offer?
Of course, absolutely. So part of that process would be one of the applications I briefly mentioned was called the blend application. So when
Mhm.
that application goes to the consumer and they complete it, hit submit, it's going to merge into our database. We're going to do the pre-approval right away and send it over to you.
Perfect.
If the question at all was, can you get a pre-commitment type of pre-approval? So you have something that's already been underwritten before you put the offer in? The answer to that question, Daryl, as well is yes, we do those.
Excellent. And then how many states are you in?
All 50.
Well, there you go, guys. I know we had a few questions about that, which, by the way, yes, we'll put his information up so you can contact Greg directly or go through the funnel that he has. But Daryl's got a good question for you here. What do you call the average yearly production of a real estate agent? Because you had them earning about earning $35,000 a year. What is that based on?
So what that number, kind of backing into that number, a couple answers to that. So what we found to be successful with agents is if you're doing at least 6 to 8 transactions per year. When we overlay, excuse me, our system and process, it's easy because we already have a strong system and process in place.
Mhm.
Our minimum production standard generally for an agent we look to hire, someone's doing at least 6 transactions per year. And for us, it doesn't matter. Is it buy side,
Great.
sell side? Doesn't matter. I'm just interested more in the person that is productive and feels good about what they're doing in real estate and earning revenue. Now, if we every once in a while, we'll have somebody who's like, listen, Greg, because I talk to everybody that comes on board. It's really important. It's a program's very personally me because you're putting your time into coming on board. We're going to make sure it goes off without a hitch.
Yeah.
If someone was to say to me, Greg, I can give you 6 transactions per year on the mortgage side based on my sphere, even though they haven't done it on the real estate side, I'd still have that conversation. Because our minimum expectation for mortgage is, can you give us 6 deals per year, 4 to 6? And some
Perfect.
people do many more.
Oh yeah, this is really good, man. All right. I think Young put up Greg's information, please, while I go to these questions so people can go to the landing page we've got, or there he is. Perfect. It's over my face. That's exactly it. Excellent. Now we switch it to Trenton,
Oh,
but
Tristan.
scan Trenton's head and you'll get the QR code. But here are the questions, really good questions. That means we got people that are interested in this, Greg. This is good. Michael, are rates and costs competitive? That's a very good question.
Great question. And it's funny, when we put the program together, one of the first people I ever brought on was I'm based out of New Jersey, is where my office at. He's very productive, maybe $50-60 million a year agent on the Jersey Shore. And asked me, he said, Greg, all right, if you're going to pay us on these deals, does that just mean the customer pays more money? I said, James, it never even occurred to me to do that. Because what's the point of having a product where I have to increase the interest rate so more people get paid? It's not the right thing to do.
No.
So that compensation, that comes from the senior banker. So imagine for a second that a loan officer is earning 1% on every transaction to have real competitive rates. You're going to earn 40% of that, of their revenue,
man,
for making that referral. And Tristan, I thought it was fair. At the end of the day, the real estate agent's always been the hub. You're dictating the mortgage person, the title company, the home inspector, the attorney, if applicable. And you deserve to get fairly compensated on that. And I thought that was a good way to put it together.
You know what I'm going to do, Greg, which I don't know why I didn't do this the first time. Once we're done here, I'm going to connect you to 3 of my team members on the team so we can run it through us. That's Mark Rader, which I know some of you guys know in the audience. Luis Robledo, he's my luxury agent. Mm-hmm. And then Valerie. I'm going to connect you to all 3 because if they can make more money, right? I make more money too because we're all part of the team. So I'm going to do that right after we're done here. Here's some good questions. We got a mess load of questions. Ron, what if you currently have an NMLS license, but not currently active with a mortgage broker?
We'd activate it at the Federal Savings Bank. So you already have the NMLS number. We just need to turn it live.
Easy. Now, is there a benefit to turning that on versus not doing it?
Well, you have to turn it on to be able to originate mortgages.
Uh-huh.
I think the big difference for that individual is you're used to being licensed in the state end. Well, now you're federal. You do this anywhere. I mean, you got a buyer who's across the country that wants to buy a second home. Well, you can't help them on the real estate side. You can refer them and get your 25%. But now you can make the referral and say, I also want to introduce you to my senior banker who's going to help you with the mortgage pre-approval. No matter who they do a mortgage or buy real estate through, you're going to get compensated as the loan officer.
I like that. Now here's a great question. It's creative. And I'm not sure how to pronounce your name. I'm sorry. I think it might be Sai or Say. But can we do a referral without being a realtor for the transaction, just on the lending side?
Yeah, you absolutely can. And we actually have some agents that have joined our team as dual employed bankers where they've become their own little hub.
Yeah, I
Where
was
now
thinking the
they've
same
also,
thing, man.
yeah, now they're the hub. Because you guys, everyone knows agents. You just become the person they're plugging into and the referrals are going through.
All right, another question. And look, keep bringing them in, guys. This is what Greg is here for. This is his added value, actual added revenue to your bottom line here if you jump in. Lynette, what's up, Lynette? Are our leads private, or does Federal Savings Bank take the lead as if it were their own?
Great. These are really great questions. So the answer is your customer is always your customer. So we'll give you the opportunity to opt in to a contact management system at the bank if you want us to solicit on your behalf for people looking to refinance and so forth. But your customer is your customer. We're not some huge conglomerate who's going to take the data and try to sell them 50 different things. We're not set up that way.
Perfect. Great question. I had that question too. So thank you, Lynette. Amanda. What's up, Amanda? Thanks for being on. Will we have to be on a set schedule, or is it on a per transaction basis to partner with you?
So no set schedule. There's no minimum required hours. Nothing like that. Our only expectation is a couple of things. So that you're doing at the very least one transaction per quarter. Very least, purchase, refinance, doesn't matter what it is, 4 deals per year. And the other thing I would encourage everybody to do is—
Wait, Greg, a refinance too?
Yeah, that counts. Absolutely.
I was going to ask him to use it on or other transactions such as stocks or investment loans as well.
That is actually really good, Trenton. Greg, we come across so many refis that I have to give out because, well, that doesn't, we don't do those things.
You know,
that is actually really good.
It's one of the things I like most about the best about the program. Never in the history of ever has a real estate agent been compensated for refinances. And as we all know, when the economy starts to do this, the Fed's going to open up the playbook and they're going to say, reduce interest rates. No one's buying houses. Everyone's going to refinance. You can get compensated on all of those.
Interesting. Dude, when I follow up with my past clients and I'm just calling them to, hey, we've got our directory. We just updated it. Tristan, do you think we should refinance? Well, I'm like, so I quarterback it out. That's interesting. A separate question, because remember, we're all over the world here, Greg. Mm-hmm. We've got somebody from, well, Canada, Mexico, Portugal, I think. Antonio, bom dia. So do we have anything in Portugal, Greg, or Europe?
I wish we did. Unfortunately, not at this time, or nothing in the Caribbean. It's just contiguous 48 plus Alaska and Hawaii, so all 50. But I'll keep you posted if we ever get into it. We'd probably go to the Caribbean first before Europe.
All right. Well, Antonio, there you go. At least you have an idea of you can push somebody on your end, right? All right. Let me go to some more questions. Derek, got appraisal, flood cert, and 1003 or 1003. What are other 3 RESPA compliance steps?
What may be easier is I could just, if you're interested and you register, I can send you over exactly what they all are.
Perfect. Scan everyone's right where Trenton is. Scan that QR code right now, and then it'll get you into the system so that Greg and his team can follow up with you. We're going to do it. I'm not sure why I didn't throw in Mark earlier, but Mark is going to get on this. Ron, do you assist with marketing materials? That's
Absolutely.
a good question.
So we've put together marketing, a couple of different layers to that. So for refinances, home equity lines, we have marketing material where you can brand yourself as the loan officer on those. When you get into some of the more portfolio stuff, like I had mentioned, we do 10% down investment property financing, which is like nobody's doing that. We can do a flyer with you, but we can't list you as the loan officer and the real estate agent on the same flyer. So in those situations, maybe I'll put myself on there. If a deal comes through, we just assign that transaction to you. But we have some specific things for refinances, home equity lines that are just branded to you as a loan officer.
Perfect. Okay, one more question, and then everyone, please scan the QR code. You can ask Greg directly, but we're just about out of time. I'm going to ask the question here. Came up 3 times. Is there a startup cost, sign-up cost, monthly cost, anything along those lines?
So the answer is no. The bank pays for everything, with the exception of getting your fingerprints done. So you need to get your fingerprints done, typically going to cost you $75 in your area. License costs, tech costs, renewal fees, continuing education, all of it's paid for by the bank.
Wow, dude.
Yep.
That's crazy, man. I don't even know why all of this slipped through. Maybe because we had so many on that whole session. I was like back to back to back to back to back.
Sure.
All right. I'm going to connect you to Mark Rader and our team. We'll get going. Everyone, please scan that QR code, jump in. Greg's going to let me know if you actually do jump in later on, because we're going to do this a few times. I want to know how you do. And the goal to this is just to provide you more value, because I want you all to adjust, grow, and make more money at the end of the day. Greg, anything in closing?
No, I really appreciate everybody taking the time. Look forward to catching up with everybody. As we're talking about, man, I really feel that if you could leverage this and earn revenue from it, hey, it's great to make a little extra money. I'm from the mindset of, what do you do with the money? You made $2,000 on a deal. Lead acquisition costs $100 a lead for real estate. I can get 20 real estate leads, close 2 of them. $600,000 price point, 1.2 million. I'm going to earn 2% at least. That's 24,000 in my core business. Such a great tool, so you can earn hundreds of thousands of dollars more in your real estate business.
Dude, this is great. Thank you for this, Greg. Appreciate you.
My pleasure.
Trenton, good question on the refi, man. That was key. That alone could be worth it. So thanks, everybody. Appreciate you. Have an awesome day.
Thanks, guys.